Welcome to another episode of Bitcoin Analytica. This is your host, Joe Saz. And today we're going to talk a little bit about the run-up that we had and the subsequent sell signals, and of course, some good news. The fact that buyers have actually started to show up and shift their orders to, I think, reflect the fact that they're probably done with the delusion that they'll collect a much cheaper Bitcoin. So let's get to it. Hope everyone's doing great. And yeah, party is now started. Okay, so looking at this, we had our pump. We just to recap, we climbed out of this nasty spill that we had a couple weeks ago into the 25,000, low 26,000 area, high 25,000 area. Exited with 2.5 to 5 band signals, 5 to 10 band signals, headed straight up, little stall, but then a high, ultimately just breaching 28,000. We had immediate sell. Well, we had sell signals up there, pretty consistent sell signals. Everything was looking pretty great for the short. I mean, obviously it's there, but as we came down, this is what I was very pleasantly surprised with. Throughout the course of, and this is what we also said was going to happen yesterday, that we just needed this thing to go sideways for a bit before buyers were going to chase the book, because the psychology of price memory, I think, was such that where we spent a lot of time was a very irrational space, and returning to this area was very familiar. Therefore, it filled pretty quickly with buyers. I mean, look, we chased ourselves almost $2,000 out of that hole, something $1,000 to $2,000 out of the hole. And normally when that happens, it's going to take a good bit of time for there to be, I mean, it's even possible for a full retrace to take place. We had that just on the inverse, right? We came down to the 25,000s from the 28s, and now we're right back up in the picture, 27.2 right now. And after going sideways for a day, in other words, after not spilling back all the way down for a day, we started to saturate the book with some buyers. And now you can see a low of 27,000 flat was enough for us to not only have 1 to 2.5 band trade signals, but some 5 to 10 band signals. So we definitely have, I think, a higher Bitcoin price in our future. I think that little spill was probably your last best shot at getting cheap corn until the next Black Swan event. Now we're probably on our way back to channel in the upper 20s to lower 30s range, 30,000s. So that's what we're seeing right now. We have trade signals, long signals, all the way as low as 27,000. I think all of them are looking pretty legit. We have a wide aggregated spot order books. We have at least a decent perpetual markets bid ask spread in favor of the bulls. So we'll call this a dual band confluence. The perpetuals are very weak with that, and things are looking good overall. I mean, just clearly the book is stacked. It's looking nice. There's a lot of static stuff down here in the low $25,000 range that wasn't really breached. So I think that remains intact. And now we start to piece the book back together with buyers, and then see the next rise, maybe a little push down, 27,000 again. I don't really see us moving really anywhere too deep in the 26s, but it'd be great to catch along down there. Even here, I think we're probably headed up to 29. So yeah, let's see what happens. I'm happy to have seen this work out so well. CME gaps. CME gap has been filled. We do not have any active CME gaps. Maybe a tiny one local right here. Looks like maybe a $20, $30 gap. You know what? We'll fill this in since that's what we do. A close right here with a low of 27,285, 27,320. Wait. 27,260. 27,285, a $15 CME gap to the downside. Very local, very small. Will it fill? I hope it does. I don't like leaving open CME gaps, but I think if anything, it'll happen soon. So, all right, CME gaps are good. We have clear skies up to the 29,130 range. And above that, we obviously have some nice stuff in the 30,000s and a very small gap overhead in the low 30s. All right, let's just get out of CME gaps. Failing the 200-day moving average, we aren't falling off a cliff. Our impending death cross, that could be something. I know I keep talking about how it's coming and how, whether it's significant or not. I do believe that it is significant to the extent that something will happen. Is it going to be bearish? A death cross is bearish, and are we going to have a red candle? I don't know. I think death crosses are almost half of the time a joke to really let people squirm, let people over leverage their shorts, and then some whale comes in and snaps them, dude. So I think if anything, this death cross is going to surprise us with the move to the upside. But let's just wait and get there. We're probably another 4 or 5 days out from that. Silver going sideways after some good moves up. Again, one thing I think is important is that all this happened in silver and not in Bitcoin. We just kept going sideways in Bitcoin, and we basically at the same time had the same move up. So I think Bitcoin has this to do next, and that's probably the grind up into the $29,000 to $30,000 range. I think that's what's coming next for us. Maybe a little bit of sideways right here, play around a little bit, maybe catch some good longs, and in the high 26, low 27 area, and then set up for the move to 29. But yeah, right now I think Bitcoin is building this piece, and silver already took that one home. So long story short, I think the markets are looking pretty decent right now. I think there's not really any outside news that's really causing people to panic right now. The Black Swan event was probably propagated in part by that one massive dude setting up a $1 billion short in an S&P or Dow Jones or whatever. So I think like that was the setup play for a lot of this downside stuff, and I think it's over. So and keep in mind, Black Swan events happen probably 1 to 2 times every year. So in other words, every 6 months or so, we expect to see a massive just annihilation of long positions. I think we got that out the way, and now they're going to clear up the media a bit and just let Bitcoin price do its thing. So yeah, on that note, yeah, I really think things are looking up for us. So just be careful out there, guys, with your positions. Don't favor anything too dominantly. We are floating in a bit of outer space. So even looking at these long signals, do I want to 20x them? No, I want to take them, but let's just see what we get right now. We're going to do a lot of channeling. We're still like 10 months out from the halving. So we have a lot of this to do, a lot of sideways and up and sideways and down and sideways and up, and probably make it to some higher price points than our local high, our yearly high of, let's say, 32,000, and maybe even our 3-month low of 25,000. We probably have some eggs to crack on either side of that, but we're probably going to make our way back to the $30,000 price range by the halving. So we basically have 8 to 10 months of this type of stuff, and we just got to get used to it. And every time we settle into a new area, we're probably going to go sideways for a little bit, and probably longer than we want. So that just means get used to scalping, get used to trading the sideways channels. All right, everyone, much love to you all. I hope everyone is staying healthy and happy and doing beautiful things with their lives. And I'll hope to see you very soon. Sorry for the late streams. I'm still on one last week of summer dad duty, so schedule is going to be a little wonky this week, but next week it's going to be a lot more regular. Everyone take care. Have a fantastic night. Peace.